I've got a lot of things to go over tonight. I've got a ton of information, and I've also got a few axes to grind. I've got some things that I want to accomplish that I've been thinking about a long time, and this is the culmination, at least to date, of the things that I found. So let me get right to it. I'm going to talk about a lot of numbers in this. They're meant to educate and entertain. Past performance does not mean future results, of course. Do not risk money you cannot afford to lose, all right? I try to do this with trading costs built in. I try to make this as accurate as possible. It's extremely important that you take ideas that you hear from me tonight, take them home with you, and you should be able to get the same stuff on your computer. It should be replicatable, as we say, so keep that in mind. Now, what I'm trying to accomplish with this, besides give you some great information, is when someone comes to you and says, listen, I hear you're a trader, I hear you're an investor, what should I do with my money? Right now, the prevailing opinion is still put it in an index fund and dollar cost average forever. And it's so simple, and you go to Vanguard and you do your thing. I don't feel like, I'm long on the record saying I don't feel like buy and hold long-term dollar cost averaging is the best way to go. I feel like we can do better. I feel like that's just selling everyone short. But at the same time, if you get too complicated, your friend, your uncle, your neighbor is never going to trade it, right? So you have to have something that's simple. Furthermore, you don't want to tell them, hey, trade this system, but it's not going to work next year. I also want to find something enduring. So keep in mind, when I give you all this info, I want this to last, and I am tracking this on my website every month as long as possible, indefinitely, because I think it can last. I'm going to tell you the reason why I think it will last. And I want you to come away with something that maybe you can use for yourself, and I could use for myself, and also for your friends, neighbors, uncles, whatever. So this is an index system, and index is basically buy and hold index funds, right? And what do we have with an index fund? We have a long bias. You buy and hold. There is no index funds sell and hold, right? Doesn't make sense, of course, but no one is saying, short the market for the next 40 years and you'll be a millionaire, right? It's long only. Now, a lot of traders get mad and they say there should be symmetry, and I get all that, but when I created this system, I'm saying, okay, fine. Index fund would use a long bias, so will I. And this is the stock market for a long time. Yes, there are definitely drawdowns, but you can see mostly since the 1920s to 2024, it mostly goes up, right? So can we agree at least it's a good idea and a good place to start? Okay. So what am I trying to do? Okay, long side and the short side, not only does no one go short when they're long-term holds, but they're not the same. They're not the same traders. The market doesn't act the same. Nothing's the same in long and short, okay? So either A, get rid of one, or B, preview, foreshadowing, maybe we use some different parameters. Keep that in mind. All right, I want a system that uses this long bias, and I don't want to worry about it. As I said, I don't want this to be wrong a year from now. I want this to endure, okay? I want this for the long term. Now, instead of an index fund, I want to use futures. I feel like I've spent a lot of time as a Forex trader and a stock trader. I feel like I've discovered futures a little too late. It's been years I've been studying it, but I felt like I should have been doing this a long time ago. Futures is awesome, and it has leverage, okay? Here's the system. System number one. We're going to try to get to 4 of them tonight, okay? I want it simple. We get down to 5 minutes, you get down to 15 minutes. It gets more complicated, even though we're going to try to go over those tonight. But this first one is a daily chart. Simple, right? We're going to use the RSI2 system. Dave, I've heard Dave talk about this. I've read articles going back to the early 2000s. Using the RSI indicator on a length of 2, RSI2, is not me, it's not new. It's something that's been around, okay? So let's use that. Sounds good to me. Now, how exactly are we going to trade this? Well, people always say, buy when others are fearful, buy when others are fearful, right? So we're going to wait for a pullback and get in. How are we going to do that? We're going to, again, this is if you want to code it yourself, enter at the open of the next bar when RSI comes out of oversold. So we want it to go down into oversold. We're going to see a picture of this in a moment. I want it to go down into oversold, then I want it to come out. Why? Well, it seems to me if it comes out of oversold, the tide has turned, right? It was going down and now it's coming back up. At least that's the idea. Oversold for all intents and purposes in this system is 10, right? So normally RSI is 30 and 70. But for RSI 2, 10 is a great oversold. So you can research that too. Now, how do we get out? Well, we don't want a ton. I just want to take advantage of the long bias. Again, nothing fancy here. We're going to exit at the open of the next bar when the run is over. Now, this could be very quick, as you'll see on the chart, but it's over when the RSI says it's over. And overbought is over. Overbought in this case is going to be 70. See, it could be, that's very typical, right? So our getting in oversold is 10, but our overbought is 70. Is that optimizing? Did I screw something up? Again, I want this to last, and I track it every month. So we'll find out, won't we? Now, here's the scary part. There's no stop loss. Yikes, right? No stop loss. Then I guess my question is, when you're dollar cost averaging index funds, what's the stop loss? There is none, right? See what I'm saying? So we have some leverage. Is that scary? Well, that's something for you to decide. And I want it to be high percentage because high percentage is fun, right? It's very hard to have a low win percentage. So I wanted something that's reasonably high, okay? Let's take a look. First thing is arrow in the corner. This is the Emini, the ES. It's a daily chart. I'm using ES.D. I'm trading this on TradeStation. In TradeStation, if you go ES.D, that means just the day session. You could have ES, which trades 24 hours a day, and just trade it from 9:30 to 4:15 p.m. Eastern. You could just do that. But TradeStation makes it easy, so you see the ES.D in the corner. Here are a bunch of trades. This is 2024 that I'm speaking to you. Not everything wins, not everything is perfect, but you see, we get a dip, we come out of the dip, and we get out. The cyan lines are winners, the red is losers. We have a little dip, we come out, and we get a winner. We're just getting ready to enter a trade as we speak right now. We'll see how that one turns out. And there are a few more trades there. You can see the RSI at the bottom. I wanted to show you that there's been a handful. I mean, it doesn't trade a ton, right? We're on a daily chart. But if you want to know exactly what it does, I blew this one up. So we're still on the ES.D, right? Still on the daily. Here we go. We've got a pullback on the daily chart. The RSI 2 with 10 and 70, 70 being overbought, 10 being oversold. It goes down into oversold. So we're ready for a trade. What do we need though? We need it to come out. So it was below 10. It came out. Right? So then we get in at the open of the next bar. Came down, it came out, open of the next bar. But as it turns out, it immediately sprinted above 70. Yay! So it gets out at the open of the next bar. So it doesn't get out at the end. Do you have some overnight risk? It's a daily chart. Yeah. Is that okay? I mean, that's for you to decide. It's fine with me. And you see that happening quite a bit. RSI went into barely, dipped down into oversold. It came out, right? And then finished the day already. In one day, it finished above 70, so we got out at the open of the next bar. Pretty simple, right? No stop loss. And that's how you do this particular system, taking advantage of long-only bias and a quick little dip and come out. Now, what's this line here? This is the filter. I want to try to put a bunch of things in my favor. So this is the 100-period simple moving average. Can't take a trade unless it's above the average, okay? So it's above the average. When all this happens, you take a trade. That's all the arrows on the screen, and hopefully you got it, right? So what's good and bad? Well, when will this strategy work well? Obviously, if the price action above the 100 SMA is going great, and it's just a minor pullback, when the trend is strong and buy the dip is working, right, which it works a good portion of the time, this is going to be great. And you just saw some examples on that. It's also going to be great when the average true range, the ATR, when the bars get bigger and bigger and volatility rises, when the ATR is increasing, you can get big wins because a big rise in a day, as long as it's volatile, you get more out of a move to overbought than you would on a time when it's not moving. Has the ATR been growing since 2020? Unbelievably so, as you'll see in a second. Well, when will this strategy screw up, right? Because everything loses. Well, when the trend is shaky, when it's dipping, when it's falling, when it doesn't have strength, when buy the dip is not a buy the dip is the start of a drawdown. Obviously, it's going to go down. and by the time it gets you out, you're going to be in a loss, okay? It makes sense to think that 2022 would be bad in a bear market, but strangely enough, same system, same chart. Look at 2022. This looks terrible. The simple moving average, our filter is pointing down. The trend is clearly down in 2022. And yet, when price was above, it came down, went into, came out, we got in the open, and one day it made it back above and we got out before it dipped again. Got out at the open, right? So there's no risk of not being able to get out at the end of the day. We get in and get out at the open of the next bar. So that one got out safely. Again, more downtrend. Same thing at the end of 2022, bear market. We didn't trade most of the year, but we went down. We were above. Oops. We were above and came out and got a nice win there. Nice thing about this type of trading is that if it's volatile, we get more out of it, right? There's no target that's diminishing our returns. It can be as big as it wants to be as long as it moves. So that's interesting. So what are we talking about here? If this was the end of the presentation, would the system be good enough on its own? Well, let's find out. Net profit, this is from 2002 to 2024. I'm only trading one contract each time. What would happen if you doubled your contracts when your comp doubled? This would grow a lot larger than 77,536. Again, these are hypothetical numbers that done with trading costs included, more than actual trading costs, right? I make more on my futures trades in real life than I do in testing, okay? Because I put so much trading costs into it, conservatively speaking. And it's on a hypothetical 20K account. Well, what would you trade it on? The max drawdown was 3,800. Again, with overnight, you're going to need probably about 12,000 a margin, depending on your broker, right? So you couldn't go much lower than that, but on a 20K account, the drawdown was hardly anything, crazily enough, right? The absolute drawdown, which is how much it went below zero when you started back in 2002, hardly anything. Nice win percentage, and profit factor is massive. So could you trade just this and compound it? Maybe, right? And here are the yearly returns. What does that look like? 2002, in the middle of the worst crash. 2008 was not worse than the dot-com crash, in my opinion. That was 3 years long and much more severe. It didn't do great in 2002, but look at 2003, right? Came right back. And now you can see this is an ATR. Well, not really. It is an RSI exit, but if the ATR is high, you get more money. It's cranking out a lot of years in a row of profit. 2018 is the secret recession, right? There was one, but it was over quickly. Nobody remembers it. 2019 was kind of listless, and then holy moly. Again, hypothetical 20K account, that's 100% in a year, right? Ish, I mean, we're just saying. Then big, 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 and it's done great so far this year. So trading this just by itself has produced a nice amount of money. Will this ATR continue? Are things going to change? I tend to think they're going to keep going, but I guess we'll find out, right? Here's the equity curve. Again, 20K account. It's up around about 400%, not quite, right? Starting with 20K and just going up. That's just one system though, right? Now, it didn't trade a lot, right? So I'm going to go kind of quickly, but you have the recording, right? You're probably watching on a recording. And you'll probably get all the details second time through. 240-minute chart will give us more trades, right? We're going to use the CCI. I love the CCI, but it's very similar to the RSI2. It's same concept as the RSI2, but it's the CCI. This time, however, we're going to enter at the open of the next bar when the CCI goes into oversold. We're not going to wait for it to come out. And that's super scary because what if it's the start of lots of bars going down? Nonetheless, we're going to do it. Oversold in CCI is -100. That's just typical for CCI. I didn't do anything special there. The take profit is at 1.1 times the ATR, length of 14. That's typical, right? Pretty standard for ATR. So at the time of the trade, you take what is the average true range of a 240-minute bar of the last 14. Let's say it's, I don't know, 100. I just made that up. It's not 100, clearly. So you'd go 1.1 times 100, and that would be your target, whatever that amount of points, whatever that range is. And your stop loss is 9 times. So you're going for a tiny little profit target and giving yourself a huge stop loss. That's scary. That's negative risk to reward, quote unquote. People freak out about that. I do not freak out about that. You can decide for yourself. Again, same ATR. So we've got a tiny target, big stop. We do have a time exit of 74 bars. If nothing's happened in 74 240-minute bars, we are done with that. Got it? Oh boy, look at this. Yep, we knew it wouldn't work. Remember, this is negative 100 we get in. It's 19 length, by the way. Wasn't on the previous slide, but the CCI is at 19 length. You see it right here. Go back up, please. Here's a trade that didn't work out. Again, we have the filter. Here's a trade that did. Two trades just worked out in April 2024. And that's how it goes. Doesn't trade if it's not above the filter, but when it does, it goes for these small little wins. Okay, that's the good and the bad, right, of such a system. Again, ES.D. Okay, here it is broken down. CCI, we're into a dip, and it barely goes down into oversold. Gets lower than minus 100, comes out. We don't care about that though. For this system, we only care here. It ended up coming out, but it dipped below, and that's all we care about because we're in at the open of the next bar. Now you take the average true range, whatever this number is, multiply by 1.1, and there's your target. The robot, of course, the code does it for me, but you can do it manually. I've done trades like this manually. You can just add it up. You got time, and there you go. Okay, so that's a typical trade. You can see I track this on the performance page on my website. That's what that means. Okay, when will it do well? Same thing. When the trend is strong, buy the dip works perfectly. Great. ATR is increasing. Same thing. Even though it's capped, but if ATR is bigger, we get 1.1 times it is bigger. When will it do poorly? Shaky trend, buy the dip is not good. Or when ATR collapses, right? That just makes our profit smaller. Here's the report. If you wanted to trade this all by itself, numbers are bigger. Not really a surprise though, right? Because we're taking more trades and we have a lot more trades. Profit factor is still amazing, but again, when you have big stop losses, you're going to get bigger profit factors. Again, one contract with no compounding, hypothetical 20K account, drawdown's bigger, so that might be scary. But in this, from top to bottom of the drawdown was only 18% of the account at that particular moment. So even though this is a big number, if it happened right away, it's bigger than this number. But when this drawdown happened, it was only 18%, which is very mild. Absolute drawdown is not very big. Lots of trades, but here's the crazy part. I mean, I would tell you to run away from any system over 90%. But I mean, I've been tracking this for months now, and I've been working on this for years. I mean, it's at 94.5%. I don't know what to tell you. I didn't mean for that to happen. I just wanted a high percentage, but there you go. Now, if that sounds great, I mean, I'm sure it would feel great, but that doesn't mean you make money all the time, because here are the annual returns. 2002 dot-com crash, we didn't win. 2005 was just a blah year. The average true range, not great. Small loser. Small loser in 2010, again, stealthy bear market. 2018, secret bull bear market, excuse me, and then, oh my, right? Hypothetical 20K account, that's a hypothetical 100%, that's a hypothetical 100%, that's hypothetical 70-some%. Again, you can trade it on any account size you want. Oh, did not like 2023 at all. Interesting, right? And then it's just stormed back. Is that, I mean, index funds have losing years, but that's what 94% win rate gets you. It doesn't necessarily mean the money comes in. Here's your curve on a 20K account. Now we're up over, well over 600% hypothetical return going back to 2002-ish. Okay, 2 down. What if you like day trading? I've got a few minutes left. We're going to get there. Well, I love day trading too, right? So this one, although I'm not going to exit at the end of day, I do like systems that exit end of day. This is not. I'm going to let this one run. It works better, this particular system, if you don't exit at the end of the day, just so you know. 5-minute chart, we want quick trends. We're going back to the RSI, but we're going to use it much differently. Length is 14, that's typical. We're going to enter when RSI goes up, not down. It's not a pullback. This is a breakout, okay? Into overbought, which is set at 75, which is a little different setting. Got to go above 75. That means the trend is strong. We're going to get in. $1,000 per contract, take profit, $400 stop loss per contract, right? 2 contracts, 2,800. See that tricky math, right? Here's what this looks like. This is from March to 2024. The market dipped, right? And then it starts going crazy at the end of the day. RSI goes up above 75, gets in at the next bar, open at the next bar, and then we just go for our profit target. That's it. And it got it, right? Not going to always get it because profit target is much bigger. This is a lower win rate. But what I'm trying to do here, I wanted something simple that just when the market breaks out, I want to be there. That's all I wanted with this. The other ones, we have pullbacks. I wanted something that broke out, okay? When will this strategy work? When short, sharp trends are around, this will do great. When will the strategy do poorly? When you have a listless market, or if it's up and down, we're gonna get stopped out a lot, okay? What's this one look like since 2002? Well, 69,000. I mean, it's up there, but it's not as good, right? Profit factor much different, right? Because we got, when you reverse a big target and a tiny stop, you're not gonna get these humongous profit factors. So you probably poo-poo that, right? Veteran, that's not good enough for me. I get it. But keep in mind, my trading costs are way not way, but they're overestimated. So if you can get something here that's decent up in the 1.2, I'd like it to be 1.2 or higher. Nonetheless, I wanted something that broke out, so that's what I'm dealing with. Drawdown is bigger, right? I mean, look at all those trades, 1,650 trades, but our win percentage is now gone down if you traded this by yourself. And you can see something like this is very shaky as far as consistency. Is this much different than an index fund? No, not much different. A few more losing years, but we're going to have nice winning years. And look at the last 5, no losing years in the last 5. These losses are pretty tiny, right? This is 3,600, really only about not even 7,000. So we're looking right 4,000 or 5,000 when we saw it on the previous screen. So the losing years are not bad. If you know what this is about, know what you're trying to accomplish, you're going to get these big winners, but you're also going to have tiny losers, okay? Here's the equity curve. We have some definitely valleys, but it's climbed up over time, up over 350%, hypothetically, okay? Well, trade those individually, but that's not what I do on my performance page because they're different. My idea was that maybe they would complement each other and I could trade them all in one account, because you can in futures quite easily, unlike Forex, where you can't trade the same thing in the same account in America, right? So we put them all together, 2002 to 2024, one contract. Now, to get the margin right, if we're in all of these trades, I bumped it up to 36,000. So that's what these numbers are based on, just in case they all trigger at the same time and we need margin. So on a 36K account, $275,000 drawdown, not that bad. Profit factor is now up. Drawdown when it happened was only 24%. We got 1,950 trades. The win rate overall, not too bad. We've almost eliminated the losing years. We almost have. 2002, nothing we can do about that. Long only system, I mean, it's tough, right? You might have to take it on the chin. But 2001, it had a trade or two before. Again, I didn't test back to 2001, but it did win. In 2003, it came roaring back, right? Small, and then, I mean, it hasn't had a losing year if you put them all together, hypothetically, since 2011. Since the pandemic, it's just been monster. 2023 pulled back a little bit, as you saw, but it's stormed back. Again, tracking this every month, it's been doing really great. I watch it trade every day, and it's doing well. I don't know what else to say, okay? Here's the equity curve. Now we're up in a 36K account. We're up near 1,200% return. I mean, it's not too shabby, right? Will it last? I don't know, okay? So that's 3 ways. Traded index, nice amount of profit. It does have losing years, right? I'm gonna try to finish up and get our 4th in that I have not talked about yet. But what about gold? Everybody, I mean, people are buying gold at Costco, right? So we might as well buy gold in our system. Gold is hot right now, just like Hansel. So we might as well trade it. Bollinger Bands, trademark. You have to say trademark after Bollinger Bands because that's the rules. It's the best indicator I've seen lately for breakouts. I mean, I've tested so many systems and made videos about it. I mean, Bollinger Bands seem to be working great. So we're on gold, GC, futures contract GC, 120-minute chart. Let's take a look, right? This one's brand new. I've only been spending a few weeks on this. This is brand new. The idea is old, but the thing is new. 100 length, crazy, right? It's supposed to be a 20 length at default. Nope, going long term. I want a breakout to really mean something. Standard deviation up is 2. Standard deviation down is 3.1. You can't do that. I know you can't do that, but I'm doing it anyway. I've been doing it for a long time in testing. long and short of the market is not the same. Take profit, we got that quote unquote good reward to risk, 3,000 to 1,000. So we're making 3 times our stop loss. What does that look like? Here are some recent trades. This is April 2024. Here's the band, 100 length. When it breaks and closes above 2, we're in. We're going long with it. It's not mean reversion. Closes above, gold goes long, hits a profit target. Dips back in, goes long, open the next bar, target, target. Oh, stop out, stop out. So it's not perfect, but that's what we're looking at. If it goes below the bands, we'll go short too. Okay. Going quickly. Gold, thankfully, goes back to 2002 also. That's as far back as it goes. So that's why I did everything in 2002. You can do this on smaller than 20K with gold, but it's $173,000 with a nice profit factor, right? Again, trading costs are built in. Drawdown was only 10K. We have 567 trades. So that's a decent, right, sample size, right? Profitable trades at 34%. So it doesn't win a ton because it's 3 to 1 reward to risk. And oh my, look at this. I mean, again, this is an incubation phase for me. I'm not trading this live. In a few months, I could be trading this live. Just a little hint there. But look at gold, right? By trading breakouts, now this is tough. Back-to-back losing years. Be tough to trade it on its own unless you believed in, gold's going to come back, because it did, right? Hypothetical 20K account. Again, we're at about 100% year here, near 100%, way over 100% win, hypothetically speaking, right? And then it hasn't lost in many years with only a small loser there, okay? Again, this would be a 20K account, right? Sorry, that was a typo up there. Curve 20 to 22 on a 20K account. Fire my editor. It's been climbing. It's up near 900% if you traded it just on its own with trading costs built in. It's crazy. Now, grand finale. What if we did all 4? What would we have if we had all 4? We've got long only. We've got buying the dip. We're also buying breakouts. So we've got systems going, trying to get the long only bias in a couple different ways, 3 different ways actually. And now we've got gold, because gold, people tend to buy gold when the market falls, although everything's thrown out the window lately, right? So what happens if we put all 4 together? 2002, 2024, 1 contract each time. You really should be compounding, but I didn't. 46K if they all traded at the same time. That's my hypothetical account. 448,000, $16,000 drawdown, profit factor 147, which is nice. Drawdown is not that bad when it happened, right? As far as, you think of 50% for an index fund. 2,517 trades. Here are the annual returns, and look at that. We would have had a small loser in 2002, but we would not have lost since. And look at these monster years. Now, are they coming down? Sure. But this one is already almost hypothetically matched last year. So could we be seeing a dip and then a rise back up again? But adding gold to our long only bias looks pretty good, right? And here's the equity curve. We're up near 1,000% again. We had to raise our account size. So without compounding, we didn't quite get as high as the other one, but we also made it much more even, right? We evened out our losing years, okay? I want something that can be traded long term. I didn't want bells and whistles. I wanted something that will be here next year. If I come back and talk to you again, we should be able to talk about this system. I hope that's the idea. We've got the market. We've got the magic index fund market, and we have gold. I mean, all we need is crypto, right? That's another topic, right? But we have gold, we have the market. And again, if you want to go to my website on the performance page, I'll be tracking this. No one knows about this gold system yet. I have a free newsletter you can join. Friday, you'll hear about this system in writing, but you were lucky you heard it here first.